Which growth stock is the best one to buy? The Trade Desk, DataDog, or DraftKings? I'm going to answer that question in this video looking at 4 different metrics. So let's get right into it and you'll get your answer by the end of the video. The first metric I'm going to look at is annual year-over-year revenue growth. And looking at this metric, DraftKings is showing the best growth at 72.87 in the last year. Next is DataDog at 62.82%, followed by the Trade Desk at 31.87%. Of course, DraftKings is the online mobile sports book and iGaming company. It needs to get approval in each new state that it wants to enter with its online gambling product. So last year in 2022, it got a few big notable additions to its state of offering. It tried to get into California, but it went into a vote, and voters turned down by a wide margin the ballot initiative that would have made DraftKings Sportsbook available in California. Now it looks like it's going to be some time before DraftKings can get into arguably the country's most lucrative market. Um, Longer term, however, DraftKings, the market opportunity, the total addressable market is expected to be $30 billion only. It's one of the smaller total addressable markets in existence today. Datadog, meanwhile, the data solutions provider, the data management provider, its market opportunity is estimated to be worth around 65 billion by 2026, so nearly twice the size of DraftKings. However, the trade desk in the advertising market, that total addressable market is massive, estimated at over $800 billion in 2022 and growing. So out of these three, even though the trade desk is growing at the slowest pace, it's got the best long-term potential for growth because the total addressable market is the largest, right? These other two companies, they may be growing faster, but they're going to reach their ceiling faster and level off. And at that point, growth is going to slow down tremendously. The next metric I wanted to compare these three on is cash flow from operations to sales over the trailing 12 months. The trade desk at 34.78%. That means out of every $100 in sales, the trade desk is turning about $35 of that into cash flow from operations. That's really good. Datadog is close behind at 25%. Meanwhile, DraftKings is losing a lot of cash flow, minus 27.92%. That means for every $100 in sales that DraftKings generates, DraftKings is using up $128. So it's using more than the amount that it costs in order to generate these sales. And most notably, DraftKings is using this in sales and marketing and promotional activity to attract new customers when it enters into one of these new states. Let's say it gets approved into a new state, it launches a massive advertising campaign letting constituents of the state know, like, hey, we're legal now. You can sign up. You can play here now. Here's a bonus. Sign up with us, and just going all out with that sales and media blitz, trying to capture the biggest share of the state's customers before any of its rivals can take share. The next metric I wanted to look at is the operating profit margin over the trailing 12 months. And in this metric, again, the trade desk is in the lead at 7.2%. Datadog behind at negative 3.5%, and DraftKings way behind at negative 67.48%. So DraftKings is losing a lot of money cash flow wise and also losing a lot of money on the income statement. The difference between these two is that there are expenses that go on the income statement that are non-cash expenses, things like stock-based compensation, like depreciation. These are expenses that go into the income statement to hurt profitability, but at the same time companies could generate positive cash flow despite those two expenses because those two are non-cash expenses. Finally, I wanted to look at these three companies' valuation to determine which one of these three stocks is the best one to buy. And looking at the metrics, the three metrics prior, I noticed that the trade desk was ahead of the other two companies. Um, in terms of longer term potential in revenue expansion, in terms of cash flow from operations, and also in terms of operating profit margin. I wasn't surprised to see that the trade desk is the most expensive stock looking at the forward price to sales at 11.92, considering that it's the best performing out of these three in those fundamental metrics. And the next one was DataDog at 9.069. And finally, DraftKings at 2.376. These valuations make sense to me considering the metrics we looked at previously, right? Still, if I had to decide which one of these three growth stocks to buy right now, I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. I would pick the trade desk. That's all I've got for this video. I truly appreciate your viewership. Thank you for watching. I'm going to link a couple of videos at the end of this one that I think you will enjoy. So please click on one of those and I'll see you over there. Thank you for watching.